Good morning, traders and investors. Thank you for tuning in to Pre-Market Prep. Got S&P 500 futures briefly back over the 6,000 level. Follow through to the upside here, following cooler than expected inflation readings so far this week. Earlier this week, we got some earnings out of TSM that we're going to talk about. We got some headlines affecting social media from TikTok, more beats from the big banks. We got more momentum in quantum stocks continuing here today. Our guest at 8:35 a.m., I think one of pre-market prep favorites, Jim Tassoni. He is CEO at Armor Wealth Strategies. Let's hit that intro real quick, ladies and gentlemen, then we're going to get into a quick look at the markets.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, a quick look around at markets, and then we'll bring in Christian and Dennis. S&P 500 futures trading up about 1/10 to 0.2%. Briefly moved back over the 6,000 level. NASDAQ up about 0.3. The Russell Small Cap Index down today, down about 0.2%. We got crude oil trading pretty sharply lower here, down almost 1%, back under the $80 per barrel level. Gold up about 0.5%. And Bitcoin here today down a good little tick, down 1.5%, back under the 100,000 level. Don't forget to hit that like button, ladies and gentlemen, that thumbs up. It helps the algorithm, helps YouTube promote here. Let's bring in the guys. Dennis, I'm going to add you. Christian, I'm going to add you. Good morning, gentlemen.
What's going on? What's going on? What's up?
Not much. A little bit of a quieter news day at least here, but we got some good talking points. We got some good discussion points that we were just kicking around right before the show started. And if you guys want to start off with earnings right away, we got probably the big earnings report from today. Taiwan Semi, ticker TSM, sure, with the big earnings beat. They also had some pretty strong guidance. What do you guys think of this report and how it's affecting other chip names?
I mean, it's a huge pop for Taiwan Semiconductor here. We're up $9. The report's being applauded. It's bringing up the chip stocks with it. NVIDIA trading higher. Spinner making a good point. AMD probably would be trading higher. But yet another downgrade on AMD, which we can get to in a second. The analysts just won't let off, and that will not allow the stock to go higher if it keeps getting downgraded every day. Eventually, everybody will just be downgraded, and then you won't have to worry about that anymore. But it's a big pop here for Taiwan Semiconductor. And I just want to go back to the S&P here, too. We'll give our thoughts here and let Christian give his thoughts. But, I mean, it was a big pop here for the S&P this morning, too. We've leaked all those gains back. So we were up another 20 handles here this morning, but just quietly leaking back on kind of a lot of good news. I mean, Christian, you've been watching all morning here, too. First, give your overall market thoughts, and then we're going to jump into this Taiwan Semiconductor report.
Hey, good morning, guys. Overall market thoughts were that, I was really paying attention to what bonds were doing yesterday as kind of just confirmation, because it was so different between what we saw on, what was this, Tuesday, when we saw the PPI report come out and, bonds sold off. Yesterday, bonds were, it was a very big move. We'll bring up this chart here in TLT. You could see we're kind of leaking a little bit. I see a lot of things kind of leaking, a little bit to the downside. But here is the big bounce that we saw in TLT. So I think this is going to be interesting to watch. One day, we know that one day is not a trend, but it was a really nice move in bonds. And what I kind of noticed towards the end of the day is some stocks, and I don't know if you noticed this too, Dennis, but some stocks were not holding in there in terms of, I was looking at a lot of growth stocks because growth stocks outperformed value yesterday, but they kind of trailed off a little bit towards the end of the day. What do you think? Did you see that as well before?
Yeah, there was definitely pockets of slowly, leaking. We'd say it's leaking more than anything. I mean, at one point in the day, it seemed like everything was higher, and it was, definitely a day where it felt like just buyers were buying no matter what. But by the afternoon, you had started seeing some leaking. And then obviously overnight, we've had a lot of good bank earnings. We've also had Taiwan Semiconductor, and that helped lift us overnight too. But then again, the leak. So I don't know. This is a really tricky market at this point in time because, naturally kind of think that we've had a pretty good pop here. But really, when you look at the technicals, now there's not much on SPY till 600. So, I mean, I kind of feel like 592 on SPY is in the middle of nowhere here. Am I chasing it, this overall market? We were 575 on SPY 3 days ago. That's when I actually bought my Micron. I bought some more NVIDIA. I bought a few things, back then. I think at this point in time, it's just hard to chase it. It's up. We literally just rallied 200 S&P points if we count the pre-market rally from today. I mean, that's a big 3-day pop. So now, if I'm still thinking, fade trade and contrarian strategies here, I think you got to still be lightening up into this. And I just wonder if the portfolio managers are thinking the same thing. I mean, even to your point with Crude here this morning, Christian, Crude had a fantastic day yesterday. Energy stocks popping big time. Today, they're leaking and giving it back. So, I mean, are we still in profit-taking mode?
Yeah, here's Crude, which had this real nice move, and we'll go back to Taiwan Semi in just a second. But real nice move in Crude yesterday, and I like this move. I was applauding this move yesterday because I am long energy stocks, but giving it back this morning, I see Crude is down about 3%. I'm watching. I've got a really important level, like technical level to watch here. I've got a chart up of Crude futures. I'm really watching the 79.50 level. Because right now you could kind of categorize this Crude move and you could say, hey, this is a real nice move from the lows, but we're still in a sideways range here where this is really interesting both for Crude and of course energy stocks of the implications is if Crude breaks 79.50. So that has me really interested. I do see nat gas futures are up about 2% this morning. So that's something as well. I'll just show this and then we'll get back on track with the earnings.
It was a good discussion there. No, that was on track in my opinion, Christian.
Thank you. So here's nat gas futures. So that's also, we've seen a really nice rally by not just your big oil companies, but also your nat gas stocks like EQT,
Yeah, huge.
Which has been seeing, even like yesterday, which I was surprised, but like AR was seeing some call activity, which, has already made a nice move. So in any event, let's get back to the semis here just for a second, because, I think the semis needed some good information. The question is I see TSM up about 4%. I would watch this 218.50 level. So we're kind of rallying very close to last week's highs. Again, we've had so much information and so much go on that you forget like where some of these names were. But Taiwan Semi was up to 219 last week. So we're just kind of returning to the scene of the crime here in Taiwan Semi. So nice move. I would want to see personally if Taiwan Semi can hold the gains and even better, like it would get me a bit more excited about the semiconductors if Taiwan Semi breaks 218.50. Dennis, you mentioned a couple of the moves, like I do see. For a minute, I couldn't remember what I was going to say about NVIDIA, but yeah, small company called NVIDIA, but that name's up a little bit. I also see names like, so here's the chart of NVIDIA. We can kind of look at this, which was hanging on there for a bit to 132. It keeps flirting with a breakdown, and it's holding, which is good, but it seems like a lot of consolidation going on here.
I sold a little bit more of my NVIDIA there yesterday.
Okay.
Still have the original position, but that extra shares that I bought, I sold most of them, kept a little piece, which I may lighten up in today too. I think this is major resistance up here at 140 now. And I just don't like the overall tape in tech. And again, a rising market lifts all ships. And, Taiwan Semiconductor coming out this morning is obviously very good for NVIDIA. So that's why I see NVIDIA popping here as well. But I just think it's crowded. I feel like this trade's going to uncrowd eventually. I don't think the NVIDIA story is over. And, I've been bullish NVIDIA for a long time. And I still hold the long-term position, that original one that I bought at $40. But I think from a trading perspective here, I think we're just due for like a change of leadership for a while. And I think the AI trade maybe cools down for a bit. Now, again, maybe earnings next week changes all that and it brings it back. But I mean, look at the leadership we've had from the banks here the last couple of days. The value trades catching up. I mean, all the market is towels. It's like playing poker and you got to read the table, read the players. Well, right now, what I'm reading is there is money flowing into other sectors. It has been relentlessly tech for basically all last year, relentlessly tech. That's what was leading. There was so many laggards last year. I mean, it's so far in January, we have seen that trade kind of reverse. And yesterday, we lift up all the leaders from yesterday, all those stocks that have been lagging. And it gives you that like hope that, okay, here we go. We're back. We're going right straight up. And, mega cap, is going to take us there. I mean, Apple was 230 3 days ago, 240, but there's overhead supply you're going to run into now here too on the charts. I mean, look at Apple, 260, 250, 240, 230. You think those 245 buyers aren't thinking like, ooh, I'm getting my money back. Maybe I should lighten up here into this Apple. And the stock, starting to break, we're definitely still in an overall uptrend. But we're weak to holding that overall uptrend. I mean, if you start taking out 230, 225, that overall uptrend would be broken here. So valuation support's not there either. I mean, the stocks aren't cheap. So it's not like fundamentalists are going to come in and say, yeah, it's too cheap, I'm going to buy it. It's all Momo plays. So all my argument is not the market to crash, but a changing of the guard for at least a little bit. It's been working so far for the last couple of weeks. I think it could continue. So I'm actually lightening up tech into this rally and looking, if we get dips to maybe picking up, some other beaten down names from last year, because that stuff's starting to work.
Dennis, I think your commentary from earlier this week is making more sense to me now. When you were, I think on Monday or Tuesday, you were really excited about value names. Is value back? And now you saying that about the potential changing of a leader here. I can tell now that you were looking for that already, maybe, even subconsciously a little bit, but yeah, I really like that point. Yeah, absolutely.
Both consciously and unconsciously, we're making some
at the
changes
same
here.
time.
But either way, I think it's important in this environment not to chase. I mean, so many people, I'm on my Twitter feed right now, and there is excitement. Like 3 days ago, Christian, looking at Twitter, there's despair. Like my one buddy saying all those people who trade those Momo stocks all the time, they're not even tweeting right now because they're just quiet over there because they've been rocked, because a lot of that Momo stuff really got hit hard. The quantum, sell off and all that hit some people pretty hard. Right now, it's back to like excitement. Oh man, here we go. We're back. Right. The markets, the inflation data was pretty good. Let's rock. Let's give ourselves some perspective though here, folks. We just rallied 200 points. 200 S&P points in 3 days. That's a big rally. It's a rally to celebrate. But I don't think we're in this huge momentum market here. I think it's still a lot of sideways chop action. And what do? When you have sideways chop action, you take profits into stuff like this. I thought 591, 590, 591. I said, 592 would be a good profit. It's went through there. I think SPY has room to 600. There's room on the charts to 600. So it's hard to initiate shorts at this point in time. But rug pulls happen, and we don't even know. Like, just go even into the political headlines here, and this conversation's going all over the place. But I think it's important to mention the Trump administration coming in. There's going to be some excitement ahead of that. But one thing that this administration has that Biden does not have, the Biden administration, is random political headline risk. And Meta, case in point right now. Yep. Because last night, Trump says he's going to do whatever he can to basically, help, TikTok not to get banned. And that just comes out of the blue. That commentary just comes out of nowhere. And boom, Meta loses $12 in like 10 seconds because the algos are that fast. And you're like, what the hell just happened to Meta? And then you see the headline go by. I'm like, oh, Trump's speaking again. So you never know what Trump's going to say either. We don't know what he's going to say on tariffs. We don't know what he's just going to say randomly. Unlike Biden, who everything was scripted very well when he spoke. Yeah. Trump just says whatever the hell he's thinking, and he will go off script. It's cool. I like that. I like that, it's just speaking his mind, but it moves markets. So what we have to be aware of is there's a lot of random headline risk from the political side here. And, Meta shareholders finding that out here right now.
There's your chop, Dennis. There's your theme for the year. And then Snap and Pinterest even moved a little on that headline, right?
Yeah. Snap is trading down. So if we just look at Meta trading down 1.4% this morning. That's off the Trump headline. And Snap trading down 3.38%. Obviously, they want the ban. It's going to be good for their companies if TikTok US gets banned. Obviously, this Trump administration doesn't think so, and I don't think it's getting banned either. So not with it coming in, the new president's coming in saying he's not going to ban it. I mean, like basically, let's put it together here. This ban is probably not going to happen.
I just wanted to chime in because that was a exceptional rant, and you did go into a couple different directions, and I just wanted to expand on a couple of those things. But I like what you were talking about with sediment. Sediment shifts so quickly from all of a sudden where there's bearish sediment, people you start to see it like in social media is great for kind of picking up on this and so forth, but it really shifted to bearish to all of a sudden everybody doing victory laps, which I saw on social media yesterday too. And I get it. It was a very big move yesterday, but you kind of try, I think that you have to try to stay one step ahead of this market a little bit. So I was just looking at a SPY level. What's the level that you're looking at that you mentioned?
600 on SPY is where I would actually probably start initiating shorts.
Okay,
because we got multiple highs up there.
I even have for this week,
yep.
I've got right around 494.81. So you could see like this yellow box. I'm using what's called volume at price, and this is basically looking at all of last week's activity. So we're not, and this is roughly like this box is roughly one standard deviation of all of last week's price and volume activity. And if you notice, we just butted right up against this 494.80 level. And that's kind of what we're waiting for to see if we can kind of take back some of these. And if not, I think in what I'm seeing in a lot of charts, not all charts, definitely not all charts, but you've got a series here of lower highs being put in. So, here was your high. It's a little bit more pronounced in the Qs chart, which I'm going to bring up in just a second. But here was your high back, mid-December. Doesn't matter what day you pick, in my opinion. But you have your next attempt to go higher. You don't do it. You have your next attempt, and you got a rejection, which was back, right around the middle of last week. And now you got another attempt here, and a lot of people are looking at that 50-day moving average too. So, of course, Rome wasn't built in a day because yesterday was a huge move. So you can't really expect that we're going to get all the way back up here in one day. But that's kind of my concern is this, since we're kind of coming up to another lower high, how much do you want to be taking off the table? Here's the Qs chart too. You can see I've actually got a trend line drawn because, like I said, it's a little bit more pronounced. A little bit more pronounced here in the Qs, but yeah. So are we really making any forward ground, or are we just kind of balancing that sediment shifts and saying, hey, we got really offsides with sediment, and boom, when that happens, you can get a really nice move, which is what we got last week. But I'm with you on this, going back to just the semis, and then we'll talk about the what the banks are doing here too in just a second. But I agree. Like, I almost have to see something kind of come out and really lead. So that's why I think watching what Taiwan Semi does today and whether it can hold the gains.
Yeah.
And then I become a little bit more bullish that, hey, maybe the semis can actually get going again, because they've been kind of stuck here a little bit. So do we want to segue into Bank of America? And
yeah, I think so. Taiwan beat, they're up. It's bringing up chips with it. Just to sum that up here, I mean, we have more bank earnings. We have more bank earnings tomorrow. We're getting some regionals coming in as well. We basically got the last two majors that reported today, Bank of America and Morgan Stanley. Both killed it. Like, I mean, Morgan Stanley absolutely annihilated it. Bank of America beat as well. The one problem is the bar is higher here now because all the other banks killed it yesterday. So when you got the high bar, you can't expect Morgan Stanley to tack on $6-7 yesterday off Goldman's report and then tack up another $6-7 on its own report. It was already priced in. People already expected it to beat. It beat, and it's got the pop. But again, you look at the charts here, and I think I always take the fundamental information and then I look to the charts to kind of think about where it wants to go or where it's going to go to. You got all kinds of tops back from November on Morgan Stanley, 134, 135, 134. And we topped out for the better part of the entire month of November up there. So it's hard to think it's just going to have the gas to just like, okay, we're just going to take out all those tops. This price is memory. It's people who bought it there. People don't like to sell at losses. There's literally, I'm going to tell you, it's not any statistics or anything, but, working in the prop world, of bright trading, all those years. People on the retail front do not like to take losses. There's the smart traders in our chat do. Christian Fromhertz, genius trader, does. Me, take losses all the time. Every day I lose on stuff. But there are so many traders that absolutely refuse to take losses. So when you see a lot of congestion in an area, that's why when it comes back to that area on the chart, it's tough to get through there because there's people who bought it here and say, oh, please give me my money back. Please come back to 135 where it's saying, and I'll never buy this stock again. So they're hoping, they're trying to get back up. Oh, it's like 50 cents off. Well, I can't take a loss. That's what they say. So, I mean, just keep that in mind when you come into these areas of congestion. That's why they can't get through it. It's loss aversion right from behavioral finance. So that's my rant on that, Christian. Give me your thoughts on the banks.
Yeah, this is really important to know, like, the market participants, right? And know that retail traders are the way. The more that you can kind of understand some of these things, you can formulate an opinion on how you're going to trade things. Like, are you going to, that overhead supply and the underlying demand is very important, especially when we're not in a break. Things like the banks. I just brought, bringing up Bank of America too, because it stalled too. And where did it stall? Similar to what you just said in Morgan Stanley, at those previous highs. Like, it's having, you said it needs the gas to get higher. I would also say it needs the juice, to kind of break through. I don't know if you have any favorites in the space that you're looking at from the long side. I go back to, what happened yesterday. Like, JP Morgan is trying to break that. And I think JP Morgan had really good earnings. So
It is.
I'm trying to, like, formulate which ones of the financials do I want to be in, because they, to your point, they all had really good earnings. It's just a question of, do they have enough to kind of begin to trend and get out of those previous highs versus, like, butting up against those highs and not, and just kind of staying in a range. So that's one. If we just go through these charts really quickly, and then we'll talk.
Sure.
More earnings that came out. UNH came out. We could talk about Target as well. But Goldman went right up to that level too yesterday and not really able to break it.
Can't
Who
get
else?
through it.
And then Citi flew through it. Perhaps the one that people are thinking that, from, like, a contrarian perspective, because I don't really think Citigroup is, like, the leader. But in terms of the price action, it did really well yesterday.
It held up really well. One thing, Citigroup, who did the buyback? Was it Citi?
Yes, that was
I
a
think
$20
so,
billion
yeah.
buyback.
That's the big difference. You got a fundamental $20 billion buyback, and we know buybacks drive price longer. The market loves buybacks, so it's actually not surprising. Also, from a valuation perspective, Citi trades, JP Morgan's like 2 times book. Citigroup's like trading under book last time I looked at it. So, I mean, from a valuation perspective, Citigroup's just a cheaper stock, which maybe helps as well. I don't like the action of JP Morgan. I'm long JP Morgan. I don't like the action this morning here. It gets right up there, basically kisses the highs from November back at 254. It did it yesterday, 253.66. That's basically a kiss of it. And now it's getting rejected here. Now you have JP Morgan down $2.65 here this morning. They didn't even do anything. They already reported earnings, but it's giving it back. I mean, this is the issue that I was tweeting yesterday, is the banks are notorious for beating, popping, and then leaking. And I mean, you're starting to see that in JP Morgan here, which is not good news. Do the other ones do the same thing? I don't know, but I'm guilty until proven innocent for me. I'm never going to buy a bank gapping up, because it seems like it's usually, when I look back a month later, I regret doing that. So if I any, like you were saying, Christian, maybe Citigroup with its relative strength, it looks a little bit healthier, and it did do the $20 billion buyback, which is, a driver of not just price today, but price tomorrow, because if they're buying back, they're going to the open market and continuing to buy shares. I mean, Apple, entire price rise over the course of the last 5 years has basically been driven by buybacks. It hasn't been driven by revenue growth. So when you get buybacks involved, stock prices do go higher. They don't always go higher. Sometimes the buybacks are done poorly, like in the case of IBM of 5 years ago. But, other things being equal, buybacks usually push price higher.
Yes.
So if you guys want to talk UNH, I'm cool with that. I think the Target sales were, like, a little bit more exciting, but
Put a Target because it makes our point. So
Okay.
we're going to continue this point of, like, this market is struggling to hold on to gains. And Target this morning comes out, kick-ass holiday sales. The stock's going higher. What was that price there, Christian? How high do we get this morning?
We got to 140. We tagged 142 right here, and that's
142.
overhead
Oh,
supply,
wow.
folks, and that's a firm rejection.
Absolutely.
I heard the
Horrible
news
rejection.
this morning. Brent, do you have the actual numbers that they
I do. So holiday sales were up almost 3%, 2.8%. Comps were up 2%. They affirmed their guidance, meaning they had some guidance out there before. They said, yep, that guidance still looks good. It was right in line with analyst estimates. Go ahead, Christian.
Yeah, so looking at the price at the price action, when I first heard the numbers, because I remember, what Target does on earnings. Target really moves on earnings, both to the upside and to the downside.
Yes.
It's not discriminating against direction when it moves on earnings. But I was like, oh, geez, is that really going to move the stock? And I heard, financial media just saying this morning, like, Target's up 5%. I was like, geez, maybe we've got a runner in this, because I've been kind of wondering with this group, and we've got retail. Speaking of which, we have retail sales in about 5 minutes. So that might shed some light on how the consumer is doing. But I hate to bring this up because every time it's been brought up, it hasn't worked. But I'm starting to kind of think that the consumer again might be feeling like the ill effects of inflation. And from from what we have seen this week with inflation reports, inflation is still around, and it's not really bending or breaking that much. I heard a lot of people say when they were looking at that CPI report yesterday that the core number was less than expected, but the headline number was still up a lot. So I'm wondering, like, I've just been watching some of the retail group, right? We talked a little bit about the home builders yesterday. Here's XRT, for example. This is equally weighted retail, and look at the candle yesterday, right? This was the high, this was the open. Try to go a little bit higher, but it was another like rejection from yesterday. It's not to say that I want to be in retail stocks, but let's look at the
but on a day, to continue that point, on a day when everything was higher, everything was getting bought, the average retail stock closed down.
Right.
I mean, that's a problem. That's a sector you don't want to be in when that is happening. And this Target chart here, Christian,
yeah.
Like, I mean, and you want to go to Costco. Go to Costco first, because it's a good
Yeah,
point.
I'm just kind of going around and just looking at different stocks, because remember, Costco had the same, a similar thing a few days back. So again, all we're trying to do is just observe what the market is telling us here. But you go back, I forget, I think it was this day, where Costco moved up, but they had really good monthly sales numbers, right? So they're telling you, these retailers are telling you that they basically had good holiday sales. But I think that you got to keep your eyes on the road ahead, and basically say, well, are we going to continue to have, is the consumer going to continue to kind of ramp up their spending or have really strong spending? And Costco, which has been one of my favorite stocks over the years, it also is having some trouble now. It may just be in consolidation. I actually try to trade Walmart too when the market was, when volatility was cranking higher. Sometimes Walmart tends to do very well in that situation, and Walmart went up that day, but again, no follow through from Walmart. Now again, it's up high, I mean, this is still like a good looking chart, but I was really looking for this. I'm looking for moves to happen pretty quickly, and I did not see a move. 90 to 40 was something that I'm watching.
The
So
Costco point you're making is exactly the Target point. Costco popped $20 on the fantastic, and they were really good, the fantastic same-store sales. It popped significantly. It gave it back that day. I mean, Costco is one of your leaders, if not the leader of retail, like at least physical retail. You could argue Amazon's probably the leader of retail, but like physical stores, Costco just is one of the, the most loved stocks. Costs $20 on just killing it over the holiday, and gives it back. I mean, now you get Target doing the same thing. Fool me once, shame on you. Fool me twice, shame on me. If you're buying Target up at 140, 141, 142 this morning, I'm talking to you algos, because they're all stupid. Not all of them. A lot of them are really dumb. You're not reading the tea leaves. We're in a market environment, one, where Christian just pointed out, is retail is underperforming, XRT style. And you just had Costco, which is the loved of loved, giving it back on fantastic sales. Well, Target is not even the loved of loved. It's probably the most hated out of the big three. So it pops, $8, $9 on what seems like really good holiday sales. Can't even hold it for the pre-market, and is now trading red. This is telling you, like, this Target move here, if you're long this Target, I'm like scared for you, because I don't think Target's bouncing back here today. You caught everybody that bought this thing this morning. Now you've got a stock that is not even loved by retail, and Christian making the good point that retail's out of favor, gets rejected up at the level it's supposed to get rejected at, 141, 142, and doesn't even open higher. It's already down with pretty heavy volume, 275,000 shares. I think Target goes lower.
So I'm gonna come in here with this retail sales number that that just hit the tape. They were looking for 0.6% estimated month over month. We get 0.4, so a little bit lower than expectations. I'm looking over at you bonds. What do you do? Bonds are rallying a little bit off the lows. Dollar coming in a little bit. We also had initial jobless claims that came in 217. They were looking for 210. So a little bit of a move there in initial jobless claims too. So yeah, so some data coming out there, and I think that's, let's see, just for the day. What else do we have? I think that's it for the day in terms of economics.
Nothing super exciting today.
Yeah.
We did just get a nice donation from Andrew Johnstone, a $4.99 donation. Thank you for that, Andrew. Asking about thoughts on SMCI. Somebody a little bit earlier was just asking about Hindenburg, I think related to that. We do got a lot of topics kind of stacking up here still that we want to get to, but we do have Jim Tassoni in the background in a few minutes here. I don't know if you guys want to try to take a look at SMCI or even talk about Hindenburg real quick before we get to Jim.
Well, we can do Hindenburg really quick. I mean, obviously they've done a fabulous job, in the business that they're in, the short selling business. And I was looking at their track record, and I tweeted it out there yesterday, and it's phenomenal. It was something like 80%, success, on the 60 calls they had or whatever. 80% of them are significantly lower. Many of them down 99, 100%. A few of them were down. So I mean, they know how to pick them. They pick really well on the companies, it seems like, that obviously are really, like not good companies or struggling companies. So they seem to pick really well. Track record speaks for itself. So kind of like ringing the register, they've done this. They've been in the business here for a number of years, 7-8 years here. And, they're maybe going to move on to other things here now. But, they probably made a lot of money with it too. It's not like they just short these things like an analyst and, pat themselves on the back when they make a good call. They actually short the stocks. So, I mean, they're making a lot of money on these calls as well. So, that's, the Hindenburg story here.
If you don't mind pulling up that chart on SMCI real quick, Christian.
Yeah, sure.
And I don't know if you guys have any quick levels to look at there for.
Yes. SMCI. Sorry, I look because to me it just is not. It's not acting well. Not to. I think somebody asked Jim Cramer the other night, not to say anything bad or positive in Jim Cramer, but people really kind of, whenever he says something, but I happen to agree with him. There was a caller that asked about SMCI, and Jim Cramer said, "Hey, I'm not really going to touch this stock because of the accounting issues." If you go back to where we were back in December, and I know that's beginning December is a long time ago, but remember we talked about this. SMCI made a nice move, and we talked about how it filled this gap. And look at what happened. And we both, I think all of us agreed on the show that it was time. Like if you were buying this all the way down here for a bounce, you got it. And we said, my opinion was take your profits and move on in this stock because it has accounting issues, right? And there's so many other names to play in this group that I think are better. I get that people see it down, retail traders see it down and they think it's an opportunity, but look at the rest of the group, and because you have such a big unknown, right? Dennis was talking earlier about that there's a little bit more uncertainty that's going to happen with Trump and tweeting and so forth, but you're talking about like the king of uncertainty here. So if you're going to play in the sandbox of something like this, I would do it with I wouldn't do it personally with your money, but I would do it with options because you're defining your risk with an option trade. So if you feel like you must get into SMCI because they might come out and say like their accounting issues are crystal clear, and maybe that causes the stock to move up, but I would be doing it with an option because it looks like it's breaking. It's on the cusp of breaking down, going down again. So
I think it's just playing the waiting game here, and you're just seeing it wait because we're waiting to see what BDO says as well. BDO is in there auditing the books, and if BDO comes out and quits or something like that, the stock could just get annihilated. If BDO comes out and says, no, the books are clean, we just cleaned up, dotted some I's and crossed some T's, and it looks good, the stock is one of the cheapest tech stocks out there in that case. So we don't know. And again, to Kramer's point, accounting issues equal sell because you just don't know. I mean, that's where we're at right now. The market doesn't know on this. That's why it's sitting here doing nothing. It's waiting for BDO. It's waiting to understand, are the books cooked or not? That's what we want to know, BDO. And that's what we're waiting for. That's what the market's waiting for.
And I just want to promote again a little bit here. That discussion, we had this news on Hindenburg, but that discussion was prompted by a nice little donation here. Andrew asking for a ticker. I mean, this is definitely something that any of the YouTube chat can do. Send a little donation.
Yeah, if you give donations, we give the tickers fast. We do the tickers faster. For sure. The zero revenue company likes revenue, even if it's $5.
We'll have a little ticker time later, maybe. Yeah. What are we doing here, Dennis? Let's bring in Jim Tassoni. 836 here. He is CEO at Armor Wealth Strategies. I got to add him to the stage. Good morning, Jim. How you doing?
Morning, guys. How are you this morning?
Doing good. How's your year been so far?
So far so good. We've had a fair amount of snow here, and it's been really cold. I know that's nothing that Dennis isn't used to up in wherever the Yukon or wherever.
Feet of snow here, Jim. I think
Jim, where are you located again?
4 feet.
We're in Grand Rapids on the west side of Michigan. So we get about 100-ish inches of snow a year, which Dennis gets in like a week.
Yeah.
So
sometimes that's a tough
Jim,
week, but yeah, sometimes happens.
Jim, so what did you think of our inflation readings here this week?
Yeah, I mean, I think there's some optimism around it, but for us, and I've been talking about this really since September, and I haven't really changed my tune in terms of I still think we're in more of an inflationary regime than a lot of people want to believe. I think there's a lot more underlying inflation in this market. I think we've got an administration coming in that wants to spend money, wants to do things, whether they be tariffs or other things that could potentially be very inflationary. I am still very negative on inflationary assets like longer term bonds, TLT, IEF, the 10-year, the 30-year. I'd completely avoid them. If you're a more aggressive trader, as I've done for a while, you can short them. I think on the 10-year, we see, if you asked me, I think we see 5.5 on the 10-year before we see 3.5, put it that way. So I still am definitely a no touch on those type of assets. And I'm also, to Dennis's point, because I think we're in an inflationary regime, and I also think there's some rhetoric coming out of Washington amongst some of the Republicans that there may be a little bit more of an infighting going on than some people were led to believe, in terms of there's a lot of Republicans up there who are talking about cutting spending, and they're actually bringing up the point that they're going to fight for spending cuts. They're going to fight, and it may result in, they've actually said the words pain for Americans. Now, whether this actually happens or not is a big wild card. But right now, I am definitely in more of a defensive mode. I favor, and I have for a while, and we've been on the right side of it for ourselves and our investors. I like large caps over small caps. Continue to favor, I think, the U.S. over international. I still think it's a better place to be. Lower beta over high beta, value over growth. And to Dennis and Christian's point, and I think this is spot on with what we have going on in this market, and what we're trying to do is, this is going to be a choppy year in our opinion. We don't necessarily think we're going to have a 30-40% market crash or anything crazy like that, but you need to pick your spots. You need to be able to add to positions or initiate positions on stocks you want to own in pullbacks, but also be willing to lighten up into rips, because I don't think we're going to have one of these trending markets that makes our lives really easy, whether it's to the upside or downside.
What do you think about something like a gold here, Jim, in
Yeah,
this
we are.
environment?
Yeah, we actually, I'm long gold. We're long gold for our investors. We think that that's a great hedge here, again, on multiple fronts. One, it could help us in a situation where we do get into some downside volatility on the markets. And also, I think it's a hedge against lower rates too. So I would much rather, if you're an investor that says, I need something in my portfolio to offset some of my equity risk, whether it be, usually you might look to bonds, but if you look in inflationary markets, and this is the thing that myself included and most traders out there, we've never really traded in an environment other than a really bullish fixed income market. And I think we may be transitioning out of that. And in an inflationary market, the correlations between stocks and bonds move in a much more similar direction than they do in a deflationary or disinflationary market. And so I'm not necessarily sure or confident that bonds are going to be a great hedge against equity risk in this type of a market. And so what I would rather do is, if I need something to offset some of that equity volatility, I'm a much bigger proponent of having a position in gold to do that.
Hey, Jim, so I just brought up the chart of GLD, and I'm drawing trend lines too, because I've been looking at this. I started to look at gold over like the last week and a half, and I'm thinking, because since going back to like the U.S. election, this thing kind of topped out.
Yep.
But it's just kind of consolidating back and forth, and I'm wondering if this is going to start breaking higher. I have not gotten back into it, but I've been looking, and it looks more healthy than, I looked at silver too, because I am looking at a lot of commodity plays. I like gold here. I think the gold chart is very constructive. Are you looking at any gold miners, or would you just express this viewpoint just outright via the metal itself?
Right now we're definitely looking, like you said, we like commodities in this type of a regime that we see ourselves in. Right now, with our signals and what we look at, the gold miners, the GDX, and also silver and the silver miners are not showing enough of a bullish signal for us to get long right now. We definitely wouldn't be short, and we're getting constructive on those names. But right now we're expressing this in gold, the metal specifically, looking for opportunities though in the miners, both in silver and gold miners, if we see a bit more of, as you say, constructive charter or constructive backdrop for these.
Gotcha.
So any sectors, like I think let's get a little bit more specific, like the macro view here, Jim, but let's get a little bit more specific. Are there any like specific sectors that you're viewing defensively here in this environment?
Yeah, one sector that we really have liked over the last, we've initiated several positions late last week, Thursday, Friday. We think it's a sector to be in. I'll call it lucky, because I believe there's a lot of luck to trading, but the sector that we were most heavily weighted in is financials right now. We really like the financial sector. We think there's a lot of momentum and tailwinds behind this sector, whether it be an administration that's probably going to loosen regulatory constraints, opportunities within to increase margins given the interest rate and overall market environment that we see. So I know you guys hit a lot on the big ones. Some of the smaller ones, two specific names that we went into on Friday last week. One is Apollo Global, the big private equity company. And a lot of people know this company as one of the major players in the private equity world. One of the reasons we really like them is over the last couple years, they've made a huge inroad into, and I know this can be a dirty word for a lot, but into the annuity and insurance marketplace. And we think that there's a huge tailwind to this market, given the fact that you've got 10,000 baby boomers retiring every day, looking for guaranteed income, looking for safety. They own a fixed indexed annuity company that's actually they're the largest issuer of fixed income annuities in the country now. And so we think that's a really interesting space that Apollo's pouring a ton of money into. We like that one. The other one we like is ACGL, and that's a reinsurer. And the reason and a lot of people are like, oh my gosh, the fires in California, why would you invest in a reinsurer? This stock's was down when we bought it about 13-14%. In less than 3 months on the backdrop of some of these. But we think when we look at this company's balance sheet, when we look at its fundamentals.
Sorry, Jim, what's the ticker on this one?
ACGL.
Okay. Is it Arch Capital?
Yes, it is.
Okay,
Yep.
gotcha. Okay,
Yep,
thank you. Sorry.
Oh, no problem. Sorry about that. But yeah, so this is another company that we really like in the, I guess, the offshoot financial space. But I think a lot of these insurers are going to be looking to offload some of their risk onto reinsurers in the environment we're in. And Arch Capital is one of these companies, really great fundamentals, one of the strongest players in this space, and I think has the opportunity to really take market share and increase revenues by helping some of these insurers offload some of their risks.
Jim, we had a super sticker. I'm going to throw you the question from Logical Fairness, and he wants to talk to Qs. So just moving back to your thoughts overall here. This trader focuses and trades on the Qs, and it's been really choppy as of late. What are your thoughts here on, the Qs and mega cap tech here? I mean, you like the financials. What do you think about the Qs?
Yeah, I mean, I'm still overall, I was very constructive on the Qs on technology last year. I wouldn't say that I'm bearish at this point, but I think you need to pick your spots. I think chasing the Qs into rallies is a dangerous game to play this year. I think there's going to be a lot more chop in this market. It's not my favorite. Technology, semiconductors, the Qs, I guess I'd call it the Mag 7 or the Grade 8, whatever you want to call it. It's not my favorite place to be right now, but I think you could pick your spots. I think on pullbacks, these are still great stocks to own. And I think you can definitely trade around this and get some good moves within this sector. If I'm looking for a 2-3 month trade, this probably wouldn't be the space that I would just invest in and move away. But for a trader, I think you have to have your levels, and I think you can trade around this. I think, after this move we've had, maybe take a pause, see if it consolidates or pulls back a little bit. I'm still bullish longer term on a lot of these names, but I think you need to be really careful here over the next couple months.
Jim, the chat is loving you here in our YouTube channel. Thanks for joining us here today. We'll see you soon, sir. Have a good day.
Absolutely. You guys stay safe. Take care.
Thanks, Jim.
Thanks so much,
guys.
Jim.
Bye.
Can we talk just a little bit about so we've talked about the earnings, of course, for financials, but I tend to this is a weekly chart of XLF, which I was bringing up as Jim was speaking, and we're not at, obviously today's Thursday, so we don't have a full weekly bar. Sometimes I begin to cheat a little bit and look at the weekly candles once we get towards the end of the week. So we're not there yet. We don't have all the information about how this is going to close. But if we close here, anybody know what the candle looks like for that we have developing so far? What does this candle look like in terms of on the weekly chart?
We're asking the chat. We're throwing this one out to the chat here. So you want to know the name of this candle here? Is that what you're asking for?
Yep. And these guys are already responding it. I see Sam is already responding, is giving the answer that I was looking for. Bullish engulfing. We've got a bullish engulfing candle here. So I'm very open to the financials here, right? Because we are looking for leadership. As we progress through earnings, this is a very important point, right? You're going to find new leadership as we progress through earnings, and so far we've got really good earnings from financials. So I think, why not financials? And whenever, in my opinion, is whenever you've got good fundamentals that are coming out, right? Because these names are, several of these banks are reporting really good numbers and so forth. Now, I think Dennis already mentioned that they are expensive, right? They're not. It's not
Mhm.
a cheap group, but if the technicals are going to back up the view, and if we do get a bullish engulfing candle, like, I'm going
Mhm.
to be allocating some money a little bit more to financials, because I don't know if you do this in your long-term portfolio too, Dennis, where you kind of wait for some of these results to come out to then
Yeah.
to kind of confirm what the thesis is for some of these groups.
I mean, I'm all about, when I'm going into my long-term portfolio and looking at what I want to invest. From a trading perspective, I don't care. I'm in and out, in and out. You're moving around. But the long-term stuff, the first thing I want to know, is there the potential for a cool story? Meaning, like, AI. Is there something like a huge driver, to drive, a growth, because I'm looking for growth. But definitely want to know, like, especially if I'm looking at the banks, because there's no growth there. I want to know what the numbers look like. You want to know the numbers first. Do they look good? What's the response to the numbers? How do they look? And I've got a good friend, Chris, who I trade with at Bright Trading for 10 years. He specializes in exactly this. He looks at earnings reports and he's got the CFA, puts on his hat, analyzes it, and says, hey, these numbers are good. This is the kind of stock I'm going to buy on a dip. And sometimes not chasing them just because they gap up on earnings, but now it's on his watch list, and it's like, oh, it pulls back with the overall market. Well, this is the kind of stock I want. I'm kind of the same way. Like, let the technicals try to time my trade for me, but have a list of stocks that I want to buy. And I think that's the whole key with investing, is buying good companies at reasonable valuations. Well, you got to know what the numbers look like. So I mean, it's hard to come in here and let's go invest right now in Nvidia and Microsoft and and all these companies when they're having earnings coming up in the next week or two. Nvidia's a little bit later, so maybe a bad example, but information is power. I mean, that's what we're all about on this show. It's why we created pre-market prep in the first place, was to give you guys the information from the overnight trading, the information from the earnings reports. Coming here, start your day with us. Let us inform you, and now you can make better trading decisions. I mean, that's what it's been all about. Be prepared for the market, open, close, and beyond. Like, we want to try to prepare you guys. We give you trading ideas, but we're not holding your hands. We're just trying to give you information so you can make better decisions. So I know that's a long-winded answer here, Christian, but I think it's very important to have a good fundamental story line up with your technicals.
It's such a good value of the show that there's kind of almost like an osmosis factor in pre-market prep. I think sometimes, Dennis, where it's like you just kind of need to be around the information and some of the commentary and some of the education that you guys are giving. It's really high level stuff, but it's just it's not easy. We're not giving you trades. We're not telling you, like you said, we're not holding your hand. You got to kind of tune in and and immerse yourselves in a little bit. And I do want to just promote here a couple over the last 20 minutes or so. We did get a couple awesome stickers in. Grove Lane with the $5 super sticker. Really appreciate that. Roger Noonan a little bit more recently here, just after Jim was coming on. Thanks for that $4.99 sticker there. And then we haven't talked about quantum stocks yet, but we did have a request from Travis Mann in the chat for a take on Netflix. Whichever one you guys want to get to, if you guys want to talk about quantum real quick, or if you guys want to
Well,
look
Netflix
at
is
Netflix.
important because it got an upgrade today. So Netflix, upgraded last night from, I'm trying to grab it here. Who was it? Christian, you got it in front of you? Who upgraded Netflix?
I will get it for you. Yeah, I did see that.
I'm trying to grab it here too. It's a race.
It's a race.
We used to do this. I used to do this with the Brentster. Seaport Global. Seaport Global
Upgraded
upgrades
by
Netflix to buy.
$9.55 target.
$955 price target here, and that was the driver last night. Stock popped 10 points right on that upgrade. It's still up to 10 points here right now. So I mean, ratings, do drive price to a certain extent. Sometimes they get faded, but in a lot of cases there is follow through. Like, people listen to these analysts and they buy, and the algos especially listen to the analysts. I mean, what are your thoughts on Netflix here, Christian? Technically,
I think that you're getting this little dip before earnings, and I will so it's very interesting the path of some of these names going into their earnings report. We were talking about, or at least I mentioned BlackRock. Look at the chart of BlackRock, and look at the chart of Netflix. Right, so big, like, all of a sudden, like, just, vroom, all the way down here. ahead of earnings. Doesn't make any sense to me. And sure enough, like big pop yesterday on Netflix. Now, we don't know what Netflix is going to do, but I could say, like, could it do a similar move where it has good earnings and just goes and pops up and goes right into the range? I actually want Netflix to just sit here for the next couple days and not do much, because I will probably look to put on a long earnings trade in Netflix, but it won't be like, it's going to be a realistic type trade where it just pops and it goes right back into the middle of the range. Because I don't know, I don't think Netflix is gonna, it's always about Netflix and like their subscriber
Yeah.
numbers
Yeah.
and so forth, and they cracked down on passwords and all that stuff. But I have Netflix. I can't follow. I've been talking to a couple friends about this. When there's one of these shows that's on, and now you got to get, like, it's on this network or this network, and like, I'm not doing that. Like, I've just decided, like, I'm not signing up for all these different networks, but I'm going to stick with Netflix because I think that they just continuously come out with new shows and so forth. So I think I like the dip here in Netflix, but I also don't think it goes back to highs. I think it moves up and back into the range, and I'll probably be looking to put on an earnings trade via like a call spread next week.
You know what's killing it in streaming is Amazon Prime. And Netflix has been the leader for a long time. And we thought, oh, maybe Disney Plus can emerge as a number two. Amazon Prime has clearly emerged as the number two here. And you can't never bet against Amazon in anything. And I find myself, so we have both Amazon Prime and Netflix, and I've always just went to Netflix first. You know, what's on Netflix? What's on Netflix? I actually find myself, and I'm curious for the chat. I'm asking the chat this question too. I find myself going to Prime first and seeing what's on Prime, and then if I don't see anything I want to watch on Prime, I go to Netflix. I think Amazon Prime is going to become a serious competitor here for Netflix, and I think if they're not already, I think it's coming. Amazon's just such a fabulous company.
What's a show that's on Amazon? Like, what's a popular show?
Well, they have Beast Games going right now. So my kids love Beast Games. It's kind of fun. And, you know, obviously Mr. Beast is the most widely followed YouTuber out there. They got this Beast Games where they're all competing for $5 million. And a new episode comes out once a week. And as soon as it comes out, we're on there watching it. But I mean, there's lots of good shows. I mean, you go on Amazon Prime and it's like, you know, and again, we get Prime basically just with our Prime, but we already have it because we got Prime membership, you know, for deliveries and stuff. So then you get the Prime as well. And you know what else I find is they have everything on there, Christian. Like, you know, like Wicked, you know, like we want to go to the movies to watch Wicked. Well, you can just subscribe to it. Maybe Netflix has that too, but you just pay for the movie. So, I mean, it's like everything is on Prime. You just maybe have to pay for it if it, you know, not everything's always included, you know, if it's a new movie like that. But I find Prime awesome. Like, I'm really impressed by it. And I do think Amazon just is the best at doing everything. And I don't know, like, if they could ever take out Netflix as number one. But if I was betting on anyone being able to do it, because Netflix is so far ahead of everyone, it would be Amazon. And I love Amazon stock here too. I'm long Amazon. It's one of the biggest holdings in my long-term portfolio. It's my wife's RSP. It's my RSP. My wife's doing a lot better because she bought it back at 107. I just bought it recently. My average cost basis is 190 on Amazon. But Amazon stock in itself is as cheap as it's been in years because the earnings have come up. I mean, you know, you could just go, and I can go get the details on it right now, but I was doing this analysis a couple weeks ago. I think it's trading like 31 or 32 times earnings. I mean, it's 35 on a forward basis. So it's moved up a little bit. When I was looking at 190, 200, maybe it was the 32. So it's moved up a bit at 35 times. But I mean, the company always has traded 50, 60, 70 times earnings. It's actually cheap relative to itself. Not saying, you know, that it's cheap overall. Netflix, the good companies are never cheap overall. It's like why you never get Costco at 30 times earnings. I mean, you're getting an awesome company here, you know, and I just think Amazon is everywhere.
Two things with Amazon. Number one, I'm going to go back to the chat again because they got the last question that I had right.
I like this, Christian.
So what is this possible pattern that we have on the weekly chart? That's my first question, and we'll see what if the chart can come up with the possible. Again, it's a possible pattern that we've got here because it's not confirmed yet. But number two, we haven't heard too much about Bezos selling. Is he basically done? Because he was the big overhang. Right?
I don't know if he's ever done because he has large, like he's not like Musk, where Musk, Musk I guess goes and buys Twitter, so he spends money too, just buys bigger things. But Amazon or Bezos is an awesome lifestyle, so like he spends money, so he's not afraid to go spend money. Obviously, he's got all kinds of other things he's working on as well. So I don't know if Bezos has ever done, but he hasn't sold stock in a long time, Christian. So maybe he's done for now. 200
Right.
to 210. He felt like it was the Bezos wall. We couldn't get through. The stock couldn't go up because he's literally selling millions of shares. Seems like every day. At least we haven't had that for a while. But they're saying bull flag on Amazon. I'm not a technical analyst. I respect the technicals and I keep it really simple. But I like the relative strength in Amazon. In the recent market weakness, where you had a lot of like Apple, look at where it's gone. Microsoft, look where it's gone. Nvidia, sold off a bit. Tesla sold off a bit. Amazon held up really well through that last market weakness here too. I mean, earnings are coming for Amazon too, so maybe you want to wait for the earnings report. But right now, I'm telling you, man, Amazon looks pretty good to me.
The sentiment in the chat was like in line with what you were saying too about Prime. Just to follow up there, Dennis. One that was mentioned a couple times was like the Paramount Plus. We got a couple Paramount Plus fans out there,
and that's all tied in with Prime too, so you can get all that through Prime as well.
Yep.
So, I mean, you don't have to just go and subscribe through Paramount. You can get all that through your Prime as well. Like the tie-ins here are good too. So I think it's eventually going to be Netflix versus Prime. I think that's what we're setting up for here. I mean, Amazon Prime does like the Monday Night Hockey now. They're trying to do the same stuff there too. They're trying to get where Netflix is going sports. Amazon's like, we go sports too, so they're going to do the same thing here too. It's really interesting.
Good job, by the way.
It's really
good job by the chat, by the way. With yes, bull flag is what I was looking for. It will probably need to confirm to Dennis's point with earnings, but this is really good. I mean, I agree with you about the relative strength. And if you go through these Mag 7 names, or I call them Great 8, there's certainly ones that have been holding up a little bit better. So I think that'll be really interesting when we get to earnings. Do we want to bring up just a couple other tickers before we close the show for the day? I heard the
up to you guys.
The quantum names really quick.
What do you got?
This is IO. So I'm just
Christian's favorite here.
I'm kind of cheating because I'm looking at these weekly charts, but IONQ held where it needed to. 29.38. Again, what a great call by Dennis earlier this week talking about how quantum can get a lift. I don't think he knew that they were going to go up as much as they did, but how good the call was.
Flabbergasted that they went up as much as they did. I'm almost scared of my call on RGTI because I said it may never see 20 again. How am I see 20 by the end of the month if this continues here? I didn't think it was going to double in a day. That was impressive.
Very nice. Any other quick ticker?
Well, IONQ. Finish your thoughts here, Christian, on IONQ, because this is one that you've brought to us before. This is a big move. I mean, it's hard to chase at $26 2 days ago, $39 yesterday. So again, you're talking about what, a 50% move up here in literally 1 day. It's a big move. Is it too late?
I mean, I would want to see it get, like, I go back to I'm such a trend trader that when something stays above like the 20-day moving, when a hot stock, and these are hot stocks, when they stay above the 20-day moving average, and then they break the 20-day moving average, I want to see them get above, right? So it did find support, like major support. The question I think now is, will it kind of get back? I don't know. I think bringing the register, if you went long some of these things, I think is the right thing to do. I would want to see these stocks regain that 20-day moving average. I don't think they really have. Here's RGTI. Here's this 20-day. The 20-day moving average is this one in here, right? And again, it really gives you a sense of something's been trending for a bit. You want to see it. The more that it retakes some of these things, the better. What's the other one? QUBT, right? Also, nice bounce, but not taking any of that major trend back. And I think QBTS is the other one. So I think the bounce really worked, but I don't know. I wouldn't chase here.
I think there's no trade here now at this point in time because it's kind of in the middle of nowhere. The bounce trade was good. I think ring the register, move on, maybe get another opportunity for a better setup. At this point in time, there's just too much risk in both directions for me to initiate a trade now on these here. I'd more be exiting my long here if I was still in those stocks. Pablo's asked like a dozen times for SoFi. So I want to throw it to Christian here. I know he's got to go, but I'm going to give him one more here before he goes SoFi here, Christian. What are your thoughts?
Okay, so SoFi, I would it had a nice move. It's had a nice move from the lows. Like it really came in and the dip was bought here around 1360. You can see I've got a blue line in here, which is what's called the virgin point of control, which I'm not going to get into, but there's demand. There was demand here. Next, what I would watch is I would watch this level of 1527. It needs to basically hold here. And then you could also use the 50-day moving average. It's not a name that I trade that much, so I can't really give you that much of an opinion because I just, I'm not that familiar with SoFi. It had a really nice run. Let's see if it can continue with the trend, and watching that 50-day moving average is going to be important.
Good stuff, guys. Real quick, just want to promote something that I've been working on and definitely leads to, the idea that we're going to get a lot more content here on pre-market prep, whether it's, on air stuff, whether it's written stuff, newsletters. I've been working on a morning newsletter each day, a recap of what's going on and on pre-market prep. If you just want to recap, you've watched the show and you just want to recap, it's a really good way to do it. If you miss the show and you want to just catch up really quick, go to premarketprep.com/#call. It's at the bottom of the screen right now if you want the URL, and sign up there. And right around market open, a little bit before, you're going to get an email newsletter that's just a real quick recap of what we did today. Good little resource there for just ahead of the open. All right, guys, another good show here tomorrow. Last day that I'm going to be around, at least helping host. Joel's going to be back on Monday. Hope you guys have a great trading session today. We'll see you tomorrow, folks. Thanks for tuning in.
Have a great day, all.